All right, hello everyone. Apologies, had to fix some technical issues, but we are good to go. Hello everyone. So, Mustafa, what's up, brother? Mayoa King, what's up, my man? Bucks, hey brother. Denisha, thank you for joining us. Edson Morales, let's go. Awesome. All right, well, let's go ahead and get into it. Let's go ahead and look at this full screen. Let's go all the way up into a weekly chart. Anita Lowe, thanks. Thank you for joining us. All right, so real quick, just make sure the audio is good and that you guys are seeing the ES weekly chart, and then we'll go ahead and get into it. Sound is good? Awesome. Great. All right, so let's go ahead and get into it. So what I'm going to do here with you guys is my usual pre-market session analysis. So what am I doing before each session to prepare myself for my trading and what I'm going to look for in terms of opportunities? I always start at the weekly chart. As always, the weekly chart is one of the most important facets of my analysis because if I understand where that weekly, daily chart is going, that makes my intraday trading extremely easy. Let's go ahead and take off the sell side. All right, so for those of you guys that are in the Telegram group, last night I shared that my area of interest was this level here and here. So the two sell side liquidity pools that was delivered handsomely this morning. So on the downside, still looking for lower prices on S&P, and my attention is on this fair value gap. Oh, actually, one thing before we get started. Do read the description with the risk disclaimer, CFTC regulations. Everything I do here is education and my opinion. If you take any risk or make your own decisions, that is completely your responsibility and you must take 100% accountability for that. So again, check out that risk disclaimer. All right, now that I'm covered, let's go ahead and get into it. So as I said, looking at this weekly fair value gap is a longer term draw on liquidity on price. So we just did get nice delivery to the sell side as we discussed. So now going into Friday, going into next week, I do want to see acceleration through this low, and then that'll give me confirmation that we're going to likely reprice in here. So a couple things to look at on the weekly chart. So we traded up to this weekly fair value gap, 50%, and then rejected hard. So the bias for this week that we discussed on Sunday was lower prices, and then we've gotten a nice expansion lower to several of the key levels we were looking at. So dropping down into our daily chart now. So we did look at this SMT here, real time, S&P failing to make that higher high. And then the market broke down. Then we looked at this fair value gap in here, looking at how we repriced aggressively away from that. And then we have been seeing lower prices into these equal lows since. So my attention through these equal lows then became this daily fair value gap here below market price. And that's what I was looking at in this morning session. So again, moving forward, that's the weekly fair value gap refined on the daily chart. This is my next draw on liquidity or where I think price is going, maybe into Friday, or it may take into next week to deliver that. But again, nice expansion lower. Daily fair value gap in here, this up close candle, this busy. Note how once we close below it, look how price hits it once, twice, unable to get back up into it because it's a balanced price range. The market was offered down, up, and then down again, so efficiently delivering it. So if the market is going to reprice lower, this will be treated as a balanced price range, and we should see the market sell off from there as we were seeing. So let's go ahead and look at the dollar index. So dollar pulling back into the range after seeing a nice expansion higher yesterday from FOMC. This is something I'll be monitoring. This blue rectangle is that daily volume imbalance. So if we are going to continue selling off on the indices, I would want to see support at these critical levels in the dollar index. So again, not much more there. Just going to have this up on one of my other monitors. Always key to monitor dollar index when trading whatever asset you may be trading. AB live stream, woot. Yeah, finally. Everyone asking me do live streams, and Told you guys I'd get started here in September, so here we are. All right, so again, before we get into the lower time frames, nothing terribly exciting. We pulled back into the range, so again, we're not missing out on anything, so taking my time here with the analysis. So this morning, before I got to my charts, the way I'm looking at price action is I'm determining where is the daily candlestick that we're presently in, where is that more than likely going to reach for. And then once I have that draw determined, I then go into my 5-minute, 1-minute charts and trade with that bias in mind. But it's never 1 minute, 5-minute before this. That's the thing that many traders get confused about, is they see, me, ICT, executing on 1 minute, sub 1 minute charts, and they think that's the holy grail when it's not. What makes that effective is understanding where that daily and weekly candlestick is going. And as we discussed from up here, we were looking for lower prices. Going into FOMC yesterday, I was interested in seeing if they would want to spike it up a little more just to clear out the stops here and maybe reprice into that fair value gap before going lower. I told you guys maybe buy side before going into the sell side. Market just wasn't having it, repriced higher and then immediately slam lower without taking out the buy side. So when it comes to manual intervention, we just have to take what they're giving us and can't look to force what it is that we're looking for. So overall, bearish, was just interested in seeing them take out the buy stops, which they did not do. But the fact that this fair value gap was left open is an important factor, because then I'm going to treat this now as a breakaway gap. So when fair value gaps are not filling in, this confirms to me that the market still has a long way to continue dropping. So that's why I've been trusting lower prices and sharing these discount levels to you all. So again, 60 to 70% of your analysis should come from the daily chart if you are an intraday trader, as that's what's going to make what you're doing, again, high probability. If you're just going straight into your lower time frames, you're trying to see the whole forest with your nose pressed up against a tree. All right, so hourly chart. So yeah, nice move lower. I do like how the fair value gaps here and here left open. Again, that communicates to me that the market is exceedingly weak. Broke lower again, all the confirmations that we are looking for. So again, just these two red lines here is that daily sell side liquidity, and then we repriced into this in the morning session beautifully. So continuing bearish order flow, premium levels, keeping the market at bay. So I remember from Sunday, we looked at this breaker here, the high, higher high, and these 3 down close candles extending that through, saying that we didn't need to come up to these inefficiencies up here because of the breaker. And then we see here the market accumulating once more, bodies perfectly respecting that, and then giving up the ghost, accelerating lower during FOMC. Go ahead and take a look at NASDAQ. All right, 15-minute chart. So opening, power of 3, so accumulation, manipulation. When do we expect the high of the day to form? When we're bearish, 70% of the time that will occur in London. So London making that high of day. Little retracement here for 9:30 for the New York session. Accumulating shorts in here for the morning, and then catching the expansion lower. Not the cleanest morning because of several factors. So I sent this message into the Telegram group with regard to the AM session after FOMC is typically more of a fickle price environment where it's not looking to run a whole lot and it can be range bound and choppy. So considering that, alongside that we had a huge range expansion yesterday, movement in London, the morning session was a difficult one, although we knew the levels it was drawing to. It's always important to be mindful of the conditions that you're trading in. There's also one other thing. And then also the other thing I wanted to share is how the markets were also decoupled. That's what I had. So taking a look at NQ and no, not you. All right, so looking at the morning session, let's go ahead and drop that into our 5-minute chart. So when I get to my desk in the morning, I'm referring to all the averages. And then when I see the averages all out of sync and doing different things, this confirms to me that we're in a low probability environment. So as we see here, the S&P, NASDAQ going lower while Dow's rallying. So coupling that with the dollar index, as it was not rallying higher, as I wanted to see indices sell off. So we did not have market symmetry. So that in conjunction with FOMC the previous day, markets decoupled, markets algorithmically communicating low probability trade environment. So covering that. All right, let's go ahead and get into what I'm looking for this session. So let's go to regular trading hours. So we open lower with a huge gap. So a lot of times I get asked, so don't we just expect the gaps to fill in? It depends. Because we opened lower with the gap and we were so close to the daily liquidity here and here that we were looking for, the market's going to want to accelerate down to those levels in a hurry and not retrace. Reason being is because it wants to get to that liquidity pool while that liquidity is still there. So whenever the market has unfinished business below a key level, it's not going to go higher to fill in the gap. It may do it at a later time. It may not, but it does not need to do it right away. Why? Because of what I already covered. Our targets were here, so the market's going to accelerate lower for those levels. So I'm not going to be taking too many questions while I'm locked in here on the charts, but AB had a question with regard to the breaker. So the reason I'm using these consecutive down close is because it's the lowest close. So if we were to go to like a 4-hour chart or a 2-hour chart, this would just be one candle. So that's why I'm using the consecutive down close candles, as that's what we use for order block theory. And remember, breakers is an old order block. So it's a mitigation block in a sense, but it's not mitigation because it made a higher high. So whenever people argue, breaker, mitigation, it's pretty much the same thing. It's just simply the breaker made a higher high and ran out the stops. So what's occurring here is mitigation. When the smart money bought this order block to send it higher, not that they're buying, sending it higher, but the algorithm is offering these down close candles so that they can buy. And then we see here it reprices higher. Once the market trades here, those positions are underwater. So the market's going to reprice into that, offering mitigation once more, and then that's the breaker PD array. So for order block theory, we want to use the consecutive candles with the lowest close. So that's why I'm using these 4 here. So again, like I said, we're just pretty much in consolidation. I know a lot of you guys are like, all right, tell me where we're going. Tell me where we're going. We're not really going anywhere in a hurry right now. Just looking at the dealing range we're in, we're pretty much at equilibrium. We've already hit several downside targets. So what I'm going to be looking for for this session is a move higher into these equal highs. That's what I'm personally favoring. So we have this huge gap. Again, we reprice the downside objectives once, twice, 3 times, 3 drives. Not that I'm trading a pattern for pattern's sake, but the fact that we see 3 drives, that offers offset distribution. So what I will be looking for is for us to deliver higher, assuming we stay above this breaker. So we should remain above this breaker if we are going to deliver into the regular trading hours gap here and these equal highs. That's personally what I'm favoring going into the PM session. And we also did see a SMT. Go ahead, look at the NASDAQ. So here at the lows, as S&P is making lower lows, NASDAQ was refusing to do so. So in my mind, as long as we remain above this fair value gap and breaker, my attention is at these equal highs here and the regular trading hours gap. AB, thanks Dylan, makes sense. Awesome, glad that covered it. But like I said, because we've already delivered our objectives, that puts me in a good position as a trader. Trader's been paid, I've met my objectives, and once you secure the bag, there's nothing more to do. So I'm not here stressing, waiting for my next setup in a hurry, because the market's always going to show what it's going to do beforehand. And like we know, there's opportunities every single day. So, all right, so let's go ahead and get into the trading layout. Junior, please look at NASDAQ. NASDAQ's going to be the same thing as S&P. It actually has cleaner highs. So I have NASDAQ, S&P, I have all these charts open at the same time. But again, so we did reprice lower to my first target on the NQ. So overall, I am still bearish. I am looking for lower prices longer term. Just for right now, given that we had that SMT and we delivered below a low, I'm personally looking for higher prices. But again, that can change if we displace lower and start respecting premium levels. So again, just looking at NASDAQ on regular trading. Open lower with a big gap. So I was thinking that the market might want to reprice higher into these equal highs and into that regular trading hours gap. Again, nothing to take a trade on for right now. Just observing. This is not the time to over leverage your funded account. Just taking it easy. Hey, Popa Vlad, what's going on, brother? Vapor Gus, do you only trade futures? I mean, it's enough, but just wondering because I may make the switch. Yeah, futures is more than enough for me. I personally just trade futures, and I'll do swing trade opportunities in the currency market. As you guys can see, we're calling euro, pound on a daily chart, walking it on a tight leash. So I do take opportunities, and my associates take advantage of the opportunities on a higher time frame using the currency market. But predominantly as a scalper, as an intraday trader, I'm focused on the index market. Motion, just passed my 150K Topstep combine. Thanks for everything, brother. Congratulations, my man. I'm sure it definitely took a lot of hard work on your part, and I'm glad to have played a small role in that. Keep it up, brother. All right, so let's watch S&P. Got NASDAQ on my other screen. Jay, man, how do you maintain consistency? I mean, day trading on a longer run requires a hell of a lot of discipline. Yeah, it sure does. And that's why most people aren't able to cut it in this business, not because they can't make money, but because it's hard to control themselves when they're losing. I shared a video yesterday with regard to how I operate my funded accounts, how I manage myself as a trader, risk management, my protocol A to Z, and all the details there. So that may help you out, giving you a good start in terms of risk management, how to control those losers and how to manage drawdown, because that's something all traders go through. I don't win every trade. As you guys know, my strike rate's high 60s to the 70s. And again, that's personally where I'm comfortable. So 3 out of 10 trades, I'm taking losses. It's how you take those losses that define you as a professional trader. If 3, even 6 losses in a row is breaking you as a trader, you're doing something wrong. That should never be the case, and that shows you're over leveraging and you're undisciplined. And that is something that is typically just learned through pain. I had to learn it like that. Many other people did as well. So it's important to just take sound advice for what it is and not have to go through those difficult learning experiences. Doing good, Papa Vlad. Met my goals for the week in terms of trading. Happy with where we're at. So hanging out with you guys here on the live stream. Don't usually watch streamers, but you use real ICT, so here I am. Ha ha ha. Interesting to see someone else's opinion on the market. Awesome. Thanks for joining us, Brandon. KK, I was hoping to get Topstep, but the small drawdown limit on futures is making me think twice. It's very different than normal prop firms. Definitely. It's something to consider. And that's why it's also important to have a strategy going into it, because the drawdown is, I believe, 3% on the six-figure account, and that is not a lot to work with. That's why it's really important to have a strategy where you're not over leveraging, where you're not overextending yourself. And that's why I shared that video yesterday with regard to how I manage funded accounts, in particular my personal accounts that I'm trading, my own personal capital. I obviously manage those differently because there's no restrictions on it. But again, to be able to manage over 300K in prop firm capital is definitely an opportunity that you don't want to pass up on if you have the skill set, because it is essentially not free capital, but at a very discounted rate. So it's nice. And for those of you guys that don't have the scratch to put into an account, you can definitely build it up in a prop firm, build up your equity, and then transfer that into your own personal funds, which is what I would recommend at the end of the day. David A, skin glowing as usual. So we're going to give it some time here. So we have retraced down to equilibrium of the dealing range that we're in from low to high. Now monitoring how we trade here. So whenever I am bullish, or if I'm looking for higher prices, for instance, and we retrade down into a discount, I'm interested to see how we trade there. And I prefer to see us create an order block, because that'll confirm a change in state of delivery going from retracement to expansion. So if we are going to remain going higher, this down close candle here should support price. And you'll notice how as soon as we reprice through the opening, this candle opened, hit that opening price perfectly, and expanded higher. So for now, if we are going to deliver to premium to the upside objectives I'm looking for, I would not want to see this down close candle violated. And then we should get speed through this fair value gap, so how we trade there will be influential. Again, not a trade idea or trade advice, just watching the candlesticks. So again, why I'm always watching a 1 minute chart, and then on another monitor here in front of me, I have an intraday matrix of 15-second, 30-second charts. I'm always watching my 15 and 5 minute. This is how you prevent getting lost in the time frames. It's always important to have those higher time frame key levels and context in mind, because it's really easy to get lost in lower time frames if you do not know what you're doing. Bucks, this guy is so genuine, my favorite in the community. Much appreciated, man. Thank you. Fabregas, that's what I feel, because I prefer lower time frame trading than futures, as they're better compared to Forex. Definitely trying to scalp in the futures or in the Forex market, not that you can't do it, it's just a lot more difficult, because then you have to worry about spread. A lot of times I would get stopped out and it wouldn't even print the level that my stop was at. So the futures market's a lot more of, what they'd call like a gentleman's market. It's cleaner, it's more regulated. So personally, that's why I prefer futures over Forex. So again, seeing the bodies still respecting that fair value gap, so nothing of interest to me yet. All right. So again, not seeing that closure above that fair value gap. So we're still seeing that bearish order flow on the 1 minute chart. All right, so violating this down close candle, respecting this fair value gap, my attention goes to the equal lows down here, and that's what I'll be looking for this session. So looking at this 5-minute fair value gap in here, extending that through, closing below that, that should now act as inversion. And this should be a mitigation block. So consecutive three up close candles. If we are going to remain bearish, attack these lows, I would want to see the market respect these levels in here. Have you studied TPO or footprints? I have not. I'm not sure what that is, AB. So again, not interested in taking any setups or in a hurry. Like I said, we've already delivered several objectives. We have a gap above us, but we also have further downside objectives that I'm interested in. And so that is not the cleanest one-sided bias as I usually have. So patience, sitting still is the play. Once we trade down to one of these key levels, then that'll give me a lot more to go off of. But for right now, dollar is not giving me clarity. So just being patient. So for lower prices, I do not like how the market's taking the lows anemically. It's not aggressively displacing through them. It's taking the low, pulling back into the range, taking the low, pulling back into the range. So that does not bode well for seeing lower prices. Looking at the hourly chart, usually I go to my hourly to determine where that's expanding. That's a step past daily bias. So once I know where that daily chart's going, I'll then look at the hourly chart. And if I can see where that hourly candle's more than likely going to expand to, I'll look to take my silver bullet trades in that direction. So I've already covered that concept with you guys to raise the strike rate of your silver bullets, but that's something that I'm incorporating typically in my technical analysis. So again, still respecting that inversion. Equal lows probably next on the list. So if we're going to go lower, we should accelerate down through this, not take it out anemically and keep pulling back into the range. So again, drawing that 5-minute inversion fair value gap through, trading into it, using it as resistance. So this is how I'm measuring and reading order flow. High-speed trading, what kind of PM session would you expect after FOMC day, this session we are in? Are you asking in terms of delivery? Like what am I expecting in terms of a clean or sloppy session? Because typically when there is a consolidation in the morning session, the PM session would be a cleaner session to trade. Yeah, so usually the afternoon session is cleaner. Once the morning session consolidates, there's typically a clean delivery for the afternoon. So opening lower with the volume imbalance, perfect. Opening, filling that. Now we should see us aggressively expand lower for the equal lows. It's personally what I'm favoring. And then looking at NASDAQ briefly, lots of sell side here below those lows. So that has my interest in terms of a target. So as long as we remain below this up close candle here, I remain bearish. And that's how I'm constantly probing order flow in my lower time frames. So again, we opened up with a bearish volume imbalance, which I like to see. So order block hitting that opening price, bodies respecting it, and then breaking down. And as I said, if we are going to go lower, I want to see acceleration through this low. So this setup here would have been the PM session silver bullet. As I said, 5-minute fair value gap, extending that through. We should act as resistance. So this is what? A fair value gap within that silver bullet hour. So going back up to that hourly chart now, I'm expecting this candle to expand lower, take out this low, and then reprice the remaining portion of this daily fair value gap. So I would not want to see this fair value gap fill in all the way. I prefer to see at least midpoint left open. So looking at the 5-minute chart here, immediate rebalance, candles low, this candle opening, trading right up to that candle low, and then repricing lower, leaving no fair value gap, indicating that the market is weak. So 3 PD arrays, fair value gap, volume imbalance, and then this fair value gap here, we should not close above this fair value gap if we are going to continue going lower. So I do like to see the bodies respecting that. So I do want to see this candle close. Perfect respect to that volume imbalance. Leaving this fair value gap open as I'd want to see. Now I'd want to see the market reprice aggressively lower. So looking here, understanding timing elements. So consolidation during the lunch. And then at 1 o'clock, what's the market doing? It's running higher for the buy stops. So it's clearing out the equal highs here and then these equal highs. On a 5-minute chart, I'm not sure if you guys can see that. I guess it just depends on the size of your screen. So looking at this on a 1-minute chart here, zooming out, these equal highs here. Lunch did what? Retraced higher. So everyone that was short overnight, they're going to trail their stops above the resistance. So lunch takes them out. I was thinking early on in the session, we may want to reprice higher, clean out those equal highs. But again, was not given that. So we got to trade what the market's giving us. So market showed a clear willingness to want to break down and showing weakness. So we take our attention to what the market's going to deliver. 74, man, we're filling up the room. Thank you all very much for spreading the word and letting everyone know what we're doing here. So a new 5-minute candle just opened. So I look at power at 3 on all time frames. So this 5-minute candle is permissible to open, give a bit of a Judas higher, and then accelerate lower. But I do want to see the market accelerate for these stops below here. So again, leaving this fair value gap open, so qualifying the breakaway gap here real time, and now we should accelerate lower on the downside. Then again, looking at the bodies here, perfectly respecting that volume imbalance as we were looking at, and then we're seeing the market sell off. The bodies respecting the volume imbalance are also respecting the weekly low we were targeting, absolutely. So when we see a volume imbalance over a key level, that's what I like to see because that indicates weakness to me. So a short from up here, definitely pay the trader around 5 handles. Again, not that I'm telling anybody to buy or sell, but theoretically in a demo account, profits would be taken here. So now we have this up close candle. So I'll be monitoring how we trade there. So I would want to see sensitivity at the open to the low. So now this inversion that we were looking at previously, I'm going to go ahead and just take this down to this fair value gap on the 5-minute, and I would expect this to act as inversion and keep price at bay, which it actually did here. So looking at this movement higher here on the 1-minute, we're just repricing to that 5-minute inversion high, and then respecting that level and breaking down. So now looking at the respect these candles here, if we are going to accelerate lower, I prefer it to do it from this level here. Alistair, you so calm, cool, and collected. Does your heart rate increase when you're in a trade? LOL. Not at all. Silent assassin. Just got to keep it calm, cool, and collected. If you win a trade, it's just business. If you lose a trade, it's just business. So having that mentality and, forging that psychological discipline over time, just become calm, cool, and collected, which is how you want to be when you're trading. If you are over emotional when you're trading, it's because you're risking too much. You haven't accepted the risk yet. All right, so hitting this 5-minute inversion fair value gap here, serving as resistance. So now we should accelerate lower, and again, respecting that last up close candle. So I would want to see the market aggressively run for these lows again. So opening lower here with the volume imbalance. So monitoring that here on the 1-minute. So interested in NASDAQ on the downside because it's more of a six sister. It still has not delivered that daily sell side liquidity pool we were looking at, and it also has equal lows. So NASDAQ has more of my interest for lower prices. And again, here we see a phantom trend line. I like to fade these types of patterns. So if we ever see retail logic and it's arm wrestling the logic that we're looking at, ours is going to win out 100% almost, not over 90% of the time for sure. So I look for retail patterns to fade it when I'm doing my trading. So again, just a lot of back and forth, not the cleanest low resistance delivery as we'd want to see, but still respecting the key levels we're looking at. So through these lows here, through the sell side, my attention goes to consequent encroachment. So 50% of this daily fair value gap is my next interest. So I do want to see speed through these lows, and I want to see aggressive acceleration lower. Trader should definitely be paid here. So respecting that 5-minute inversion, as we were looking at here, bodies respecting that becomes a balanced price range once we go lower, higher, and then lower. So respecting that balanced price range and then aggressively repricing as we were expecting. For order flow to remain bearish, as we discussed, up close candles should be respected, or bearish order blocks, and then we've been seeing that. Ashley Elkins, pay the trader, absolutely. So again, looking at the NASDAQ aggressively running lower because it's the sixth sister. So the better shorts would be in NASDAQ. So again, seeing this fair value gap left open gives me confidence that the market's going to want to continue aggressively expanding lower. So the fact that it's leaving it open indicates that IBDA is in a hurry to reprice to specific levels. So seeing that left open was further algorithmic confirmation that this is a weak market. What a precise shot. Sheesh. Precision, that's what we specialize in. Business as usual. So as you guys see me calling the markets for you guys on a weekly, daily, hourly chart, it's no difference for me to do it on a 5 1-minute chart. It's the same thing, just in lower time frames. 1,150 demo money. Let's go. All right. IKEA boy, do you teach this on your channel? Do I teach what in particular? I teach how to trade, my strategy, how I personally look at the market. But all these concepts have already been discussed before, but you guys are typically used to me doing them on daily and weekly charts. But again, the same logic applies all the way down to a 1 minute. So now that we've traded through this low, I do want to see the consequent encroachment of this daily fair value gap as my next target. So 43.91. So we should accelerate lower from here now, trading into that fair value gap, institutional order flow entry drill. Close opening with the bearish volume imbalance. So now we should reject from these premium levels. So stop would be rolled to here if it was a trade. Let's go ahead and take this level off. So again, 5-minute inversion, comes balanced price range, market accelerates lower. So let me go ahead and share the NASDAQ with you guys. S&P is a bit of a snooze fest. Like I said, NASDAQ was the better short. So equal lows. My attention is here for NASDAQ. So I want to see us accelerate lower. Let's go ahead and mark that out. So I should see the market run aggressively lower now for the stops. So again, new 5-minute candle just opened up. So it's permissible for this candle to open wick higher, but we do want to see it accelerate. So again, looking at power 3 on all time frames. So this low here, the 1499.40, is that daily low that we were looking at yesterday. So notice how the market is working these same old highs and lows here. So now I'd want to see NASDAQ accelerate lower, another 20 points into the equal lows. So again, NASDAQ not filling in this fair value gap perfectly as we'd want to see. This fair value gap, 50% of it left open beautifully. So that gives me the confidence to trust we're going to deliver lower here for the sell side equal lows. And then I want to see how we trade there. So again, qualifying institutional order flow entry drill here, real time. Not expecting us to trade and fill in the fair value gap completely. So up close candle here, 1 minute chart. Would want to see some respect to that level and begin accelerating lower. David, bar by bar commentary is incredibly helpful. As always, thanks for the insight. Yeah, absolutely, brother. Glad it's helpful. Thanks for the feedback. So ES repricing to the 43.90, so hitting that consequent encroachment level perfectly. And then looking lower on the NASDAQ, the 14,792 is that daily low that is my area of interest, depending on how we trade below these lows. Thanks again for doing this live. Great to have that extra confirmation. Absolutely, Denisha. It's a pleasure. Ashley Elkins, we need this 2 to 3 times a week, bro. That's what mentorship's for. Yeah, I'll definitely do this when I can. Once I meet my goals and I'm done with my trading, I'll definitely look to get on here and hang out with you guys. As you guys know, before I became a content creator, YouTuber, before that I was a trader. So trading's always going to be the most important thing for me. And then secondary, I'm a YouTuber, content creator. But I'll definitely, like I said, once I meet my goals, come out and hang out with you guys. Let's go ahead and look at the 4-hour chart. So I'm just looking at the 4-hour chart. The sell side, that's of interest. Same targets I shared in the Telegram. I'll be looking for this target next. I don't know if it's going to deliver in today's session. We'd have to have a pretty animated last hour over 43 points. That'd be a pretty big run, but that's where my attention's at. 15 minutes. So now that we've closed here on this 5-minute candle, remember, and this was a bold um, blue candle in my case, when it was bullish, understanding power 3, that it's going to open, give some type of manipulation. So as I'm watching these retracements on a 1-minute chart, I'm not concerned, I'm not freaking out, because I understand the timing aspects with regard to all time frames. So these natural retracements, just up to inefficiencies, happen at specific times. And then once you understand the timing aspect to all this, you eventually know what you're looking for and what should happen in price as a result. So multiple down close candles in here. So it would not be out of the realm of possibility for this market to want to reprice into that 5-minute fair value gap. Obviously, I prefer it to be left open, and that'll confirm to me that this market is extremely weak, but it would not be problematic to see that. Do you use new week opening gap and new day opening gap? I do. I have a template open right now actually on my laptop with new week opening gap open for S&P and the NASDAQ. So I'm monitoring new week opening gap on all assets I'm trading, regular trading, all those things I'm monitoring actively as I'm trading. But I don't have them all on my charts. As you guys know, I like to keep my charts clean because it's extremely distracting to have all these things on my chart. You wouldn't be able to make out what anything is. So I just have them on different templates across all my monitors. So consolidating here before hitting the equal lows. It's something the market typically does a lot. It's called crouching, where it'll trade down, stop just short of an old liquidity pool, and consolidate. What that does is that engineers retail-minded traders into seeing this as support, or the market's hitting this support level to rally higher, and it's building in more liquidity below this low and these equal lows in here. So when the market does a little bit of a retracement before hitting a low, that's not problematic as long as I understand the PD arrays that we're working with and where that retracement should stop. So trading into that 5-minute fair value gap in here. So I'll want to monitor how we do trade there if we are going to reach for these equal lows. So just took out a swing high. So for order flow to remain bearish, we should take out the swing high and reject it. And that's what I'd want to see for lower prices. Closing above this fair value gap in here would cancel my interest in looking for lower prices. All right, so I do not like to see that the fact that the market is closing above this fair value gap. So I'm going to want to see how we close on this 5-minute candle. So considering that S&P already ran out these lows and delivered the daily fair value gap consequent encroachment, definitely profit taking there. Not expecting a whole lot. As I said, we've already had several objectives delivered. So I like to see how we're seeing a nice wick, so a rejection here. So remember, the wicks do the damage, body tells the true story. which is why I told you guys I wanted to see how this 5-minute candle closed. So we should start seeing this market sell off in here from this 5-minute fair value gap. It's just a natural retracement, nothing to be concerned about in terms of lower prices. So if we start showing support inside this fair value gap or this down close candle, if we start seeing sensitivity and support at these key levels, then that would indicate to me that there's a change in state of delivery and that order flow is bullish, and then I would have to readjust my stance. But for right now, just looking at the higher time frames, we should still be seeing lower prices. What did you say that was called? High speed trading. So crouching. Crouching is when the market, like I said again, consolidates right before hitting an old low, building in more sell stops or liquidity below those key levels. So what I'm monitoring now is consequent encroachment of this wick. So 50% of this wick, I'm monitoring to see how we trade there, if at all. Any word on your mentorship, brother? Yeah, man. So as I discussed, I think it was last Sunday, planning on opening it up in November going into December after the fall months, get situated, and I think that'd give me plenty of time to lock in and put that together because, as going into mentorship, that's a big responsibility in terms of, making sure everything's the way it needs to be, and, obviously to our standard here at Adora Trading. So the word for right now is probably going to be November, December. That's what I'm looking at. So right now, S&P is in a new week opening gap. So I'm going to monitor how we trade there. So I'll just show you guys what my other template looks like. So on another monitor, I have my new week opening gaps, and then I toggle between that and regular trading hours. So I'm constantly referring to all these key levels. So again, looking at this new week opening gap in here, if ES is to remain bearish, I would not want to see us trade higher to the premium end of this new week opening gap. So we should remain below this consequent encroachment. So you see how we trade up and hit that, reject. I'm reading into all these signatures as I'm trading. So I would not want to see the market trade above the premium end of the fair value gap, as I said. So we should remain in the discount end and start selling off from here if we are going to continue lower. And then also looking at NASDAQ, same thing, still inside that new week opening gap. So equal lows, but there is a SMT between NASDAQ and S&P. So if we are going to remain bearish, I do want to see this S&P erased. So I would want to see the NASDAQ start selling off and run for these lows and erase that SMT. It's back on my other monitor. So again, just watching that 5-minute candle, seeing how we trade in here. So I would want to see us close inside of that if we are going to remain bearish. How does it feel to trade live? Any change? Not really. It's smooth. And one of the big things in my trading is the result of one single trade, the outcome of that is insignificant for me because I'm risking what I'm comfortable risking, and I'm trading a model that I've trusted, that I have several repetitions doing. So drawdown, getting myself out of losing trades. I've been there, done that many times. So that breeds a lot of confidence over time of doing that. And the biggest thing is the risk, and accepting that and understanding that. You ask a professional money manager, what's their next trade result going to be? They'll tell you they don't know, and it doesn't really matter because one single trade is irrelevant. What you need to focus on is the next 50 to 100 trades in that large sample set. That'll give you a more accurate depiction of the long run. And most people get into trading for a get rich quick, looking to hit home runs right away and over leverage and just do a bunch of silly stuff. And then over time, you just build fear of the market, anxiety, when it should not be a anxiety inducing process. So again, looking at this 5-minute chart, I love to see the bodies there, respecting that. So now this candle needs to accelerate lower if we're going to continue going lower on the day. That's what I'd prefer to see. Jonathan, I low-key think he is ICT's son. How did you know? You got me. So we just had a new 15-minute candle open in here. So monitoring the 15-minute, that's more like the bellwether chart, or the chart that I'm constantly referring to keep my bearings. So we just created an up-close candle. So if the market's going to be bearish, we should accelerate down through this up-close candle and then make it an order block. Yeah, so details on mentorship, that'll be released when we have our website and everything, and you guys will be able to look at all the details there. Not gonna get into that right now. So again, seeing that 5-minute candle accelerate lower as we'd want to see. Bodies telling the true narrative. Wicks doing all the damage. Brother, I absolutely love the way you teach. You're making me calm, and I have a problem with that. Unfortunately, you're making me more calm and strict trader. I really appreciate it. Awesome, brother. Glad to help, man. That's why I do it. So again, if order flow is going to remain bearish here, I don't want to see the market respect this fair value gap or order block at all. We should melt through it. But again, as we discussed, calm, cool, and collected here on the retracement. Not worried, not stressing it. Why? Because if the market's going to deliver here, it's going to want to retrace and build in more sell side. Remember, if like we were, smart money is going short here at all these key levels. If they're selling short to the buy stops here, there needs to be orders for them to distribute that to. So the market's going to do things to build in orders below these key levels. So on these retracements here, we're not concerned or freaking out because we understand what the market's doing and why it's doing so. Narrative is huge when understanding price delivery. All right, so let me go ahead and put the S&P back up. So looking at that daily fair value gap here for S&P, so we just had a nice retracement, but we did hit several of our targets, these equal lows in here. And then again, the consequent encroachment of that daily fair value gap, which is the blue rectangle we're in. So beautiful delivery, natural retracement. But look at the bodies perfectly respecting that daily fair value gap. The wicks doing the damage. This candle trading up higher here and then rejecting that, breaking down. So we should remain below this high here if we are going to continue lower on the day. One second. Be right back, everyone. Take a little bathroom break. All right, so is the algorithm still behaving or what? So fair value gap rejecting that, would want to see that continue lower. Jonathan Velasquez, could you share quickly how many monitors you are using and what is being shown on each? Yeah, definitely. So I have 2 monitors open, and then I'm watching Family Guy on one. Nah, I'm just joking. So I got 4 monitors. One S&P, one is the NASDAQ, and then on another one, I'm looking at the dollar index, as well as new week opening gaps and regular trading hours. And that's also the other one I toggle when I want to look at my brokers. So I'm managing my brokers through one. Then I have another monitor in front of me that shows a daily chart of NASDAQ and S&P, and then the 30-second and 15-second charts. All right, so again, we should run for this low aggressively, and then looking at the equal lows on the NASDAQ. So again, here sharing the, I'll just keep it on this one so we can just refer to it. All right, so NASDAQ accelerating through the lows. But again, just as we were looking at on here with ES, beautiful rejection of the consequent encroachment, accelerating lower. And then same thing for NASDAQ. Look at the bodies there, telling true narrative, repricing through these equal lows here beautifully. So again, bodies respecting that, and the fair value gap here as we are monitoring, now aggressive repricing through that. So, all right, so go ahead and closing out of everything here. NASDAQ paying the trader on the equal lows. All right, sweet. All right, sorry, I had to close out of some transactions and get everything squared away. All right, so getting that nice delivery lower through these lows here. Now we should accelerate lower if we're going to continue repricing lower for the day. But this would complete my session here. Trading below these lows. NASDAQ, let me go ahead and pull NASDAQ over. So as I said, NASDAQ would have been the better short because it was the 6th sister. So it had much more room to cover to catch up to the ES. So retracing higher here on NASDAQ, looking at this 5-minute fair value gap. Look at the bodies, again, telling that true narrative. And then as we discussed here, this candle here should start accelerating lower. And then we saw that nice acceleration lower. Cleaning out the equal lows here and here. Leaving this low intact. But again, that's more than enough for profitability. And that's what I was looking at for this session. So that would complete my session overall. So walking price from up here down into the sell side beautifully. Mayoa King, let's all like this stream. This man deserves a flower. Thank you very much, Mayoa King. Much appreciated. So it's okay for bodies to close above 50% of the fair value gap on NASDAQ? Yes, it can, as long as the bodies are respecting it. I prefer to not see it do so, but it doesn't invalidate the idea or anything. Just the fact that the bodies are inside. I'll take this off. Just the fact that the bodies are being contained inside of that 5-minute fair value gap is more than enough. And again, we should start selling off here aggressively if we're going to remain bearish for the day. Sharky, how often do you do this? First day. So, first day. Just joined. Wish I had sooner. Thanks, mate. Absolutely, brother. The recording will be up if you want to refer to for study purposes. But nothing scheduled. Just was at the gym and was going to share my analysis here with everyone before the session. So I was like, I might as well just do it on a live stream. I told you guys I was going to do it over the summer, so here we are. Cynthia Arrow Garrison, beautiful Dylan, going fishing now. Yes, sir. Yes, sir. So again, let's go ahead and break some of this down. Let's look at the details. Sharky will definitely study. I love all your stuff. Awesome, man. Thank you very much, brother. So again, algorithmic signatures all over the place. Fair value gap, new week opening gap, saying how we should show respect there if we're going to go lower. Bodies perfectly respecting that. Going up to S&P, same thing. Remember, I told you guys that if we're going to remain bearish, I do not want to see the premium end of that new week opening gap traded to. Hits the consequent encroachment, also breaker, which is high, higher high. Breaking down in here, hitting that breaker beautifully. And then rejecting, selling off. So bodies respecting the breaker, but hitting that consequent encroachment of that new week opening gap, and then breaking down there. Do you only use one lot size and add the trades? It depends. If it's a setup I really like, I'll go in with up to 10 contracts, depending on the account. Obviously, I'm not comfortable trading contracts on or 10 contracts on a account size that's less than 250K personally for me. But so just my standard is 3 contracts. So I'll go in with 2, and then if it's a nice opportunity I like, I'll pyramid. So I'll show you guys how I do that. So let's drop down into our 15-second chart now. So when we're up here, and you know what, let's go to S&P. You know, I think we talked about that one more. So let's go and just look at S&P. Let's put NASDAQ on the other monitor. So looking at S&P here, we looked at this inversion, fair value gap in here. I'm going to make it purple. And I'll show you guys how I go in and pyramid and build in bigger positions. But I'm comfortable going in up to 10 contracts. But my standard is 3 for a 6-figure account. All right, so let's look at this. So going into the session, initially was looking for these equal highs as order flow was bullish. It showed it wasn't doing it, breaking down through the bullish order block. No worries, we're going to get in line with price. So when we looked at this 5-minute inversion fair value gap, extended that through, said we should not get above it. Fair value gap, order block, price trades into it, breaks down. So now let's look at price action on a 15-second chart. What do you believe is the best time to trade NQ and ES? Best time to trade New York session is great for the indices. So again, we had that entry on the fair value gap in here on the 1-minute chart. But how I would go about pyramiding personally is once I have my levels of interest and where the market's going to want to draw into, that would be an entry there, trading higher up into this last up close here. Bearish order block, 4 consecutive up close candles. That's an order block on a 1-minute chart. There I could build in a bigger position. We open lower here with the volume imbalance. As soon as we trade into it, inside of that 5-minute inversion fair value gap, I could be selling again. Reclaiming that fair value gap there, I could sell short again. And that's how when I build in 5, 6, 7 contracts, I'm using this logic and I'm just pyramiding, building it in these lower time frames, sub 1 minute, understanding where we're going on that higher time frame, which is key as always. So my next area of interest on S&P would be a full fill of the fair value gap, or the daily fair value gap here, which is the blue rectangle. So 15-minute candles as we were watching, wanted to see it do what? Expand lower. So now we're into that last hour of trading. So understanding the time, we just got to 3 o'clock. So we're in the New York session power hour. So my next area of interest, as I said, is the full fill of the daily fair value gap. Owen, do you have any interest in... I'm not sure what that is, brother. Thank you, Dylan. You said earlier DXY is a bit hard to read. Is that still so? Yeah. So for dollar index after or or currencies in general, after about 1 o'clock, they pretty much go into consolidation. They'll do little flurries of movement here and there, but it pretty much goes into consolidation. So this is just what I'm looking at in dollar as I'm trading PM session. In the AM session, it's a lot more animated, but I want to see us remain in this range. So if I'm looking to buy, or excuse me, in this case, go short the NASDAQ or S&P, I want to see dollar either consolidating or going higher. So as you see here, it's just slowly gravitating higher. And that's all I needed in terms of intermarket confirmation to trust that we're going lower. So now if I want to see us continue expanding lower on the indices market, I would want to see dollar index continuously gravitating higher into these equal highs. And then that'll give me that confirmation to trust the sell program in indices. So the same way you guys see me do intermarket analysis on a weekly, daily chart before the week, I'm doing that same thing intraday on all these time frames, and I'm taking in all this information. Good question, Jonathan. Freedom Futures, thanks. Absolutely, brother. Watched your videos, but find the lunch macro, hour macro difficult to understand. Could you do a video? Yeah, def. That's something I could maybe touch on in the future. Lunch is a pretty difficult. It can be fickle. A lot of times it can consolidate. Many times it'll retrace on the morning session movement, which is what's typical. Or sometimes it'll just flat out do a reversal. So there's a lot of parameters you got to know and understand. In this case, why were we expecting continuation for the PM session? Because NASDAQ still has unfinished business below the lows. Lunch, again, as we discussed, retraced higher. So let's go ahead and look at the lunch hour. So we expect lunch to run on the existing positions that are profitable. So what happened in the AM session and overnight? The market had a nice run lower down to the levels we were looking at. So for lunch, we're going to expect the market to trade higher into a short-term premium. The reason it's doing so is to offer smart money that liquidity. So the equal highs that were here and here, stops are trailed below these levels here and here. So retail putting stops, and even large funds trade like this. They put stops above these levels. And then the market's going to want to trade up, knock them out for the purpose of what? That market efficiency paradigm. Smart money's going to want to accumulate the stops above this high and these highs here, looking for the PM session continuation to the equal lows like we were looking for. Mustafa, please make session daily paid. Not sure what you're saying there, brother. Food, fashion, travel. Thanks, Dylan. Mayo King. Thank you, Dylan. Absolutely. D. Patel, can you explain how you got the daily fair value gap at the bottom? Yeah, let me go ahead and cover that. So remember, the market's only doing two things. It's going to liquidity and inefficiency. So if our attention is at these equal lows here and here, the market's going to want to rip into that. I'm looking for inefficiencies that are near that level. So this daily fair value gap in here, this candle's high, this candle's low, extending that through. That's the level we've been working with. And then at the beginning of the session, I discussed my longer term outlook, which is this daily fair value gap in here. But the way we're seeing the market aggressively accelerate lower, we could easily see that delivered on Friday. So if we are to remain bearish, we should remain below these two up close candles. So last hour, expecting continuation on the downside. NASDAQ finally taking out those equal lows, expecting continued acceleration. Hi, I am from India and earned 6 figures with ICT Silver Bullet. It's amazing. Awesome, brother. Absolute money making stuff, my man. So glad to see you taking advantage of it. So looking at this daily fair value gap, we should remain below consequent encroachment. Probably should not get above that if we're going to continue lower for the afternoon session. So that's what I'm going to go into the market looking for. Two up close candles. That's our bearish order block on the 1 minute. So again, price should remain below that. It doesn't even need to trade up into this fair value gap because it's a balanced price range where the two fair value gaps overlap. But if we do, I would definitely expect sensitivity in there. Olawale, incredible session. Much appreciated, brother. Thank you very much, my man. Glad to help. Yeah, so I think we're going to see a nice move lower here for the last hour. So I'll go ahead and stay with you guys till market close. So the market breaking down. So keep in mind it also is the last hour. So it's not always the best idea to assume new positions in the last hour because the daily range is typically capped in that last hour. So because we had a nice down day from open, because objectives have been hit, we finally repriced the low end of that daily fair value gap as we were looking for. Beautiful delivery. It would be reasonable to see the market cap the daily range. Not to say we can't keep it accelerating lower, but like I said, we have already seen a nice downside delivery. So I'm going to be patient, not looking to force anything in this last hour. Denisha, as always, thanks for your time, Dylan. Going to finally grab some food and do some back testing. Be safe, everyone. Awesome, Denisha. Thanks for joining us. Much appreciated. Take care and have a lovely rest of your day. All right, so just going to monitor here how we trade in this fair value gap. So if we get through it and violate this high here, then that would not be bearish anymore. But again, just tape reading. Like I said, nothing to take a trade on. We're in the last hour of the day. Huge move lower. Not to say we can't keep going lower, but also not to say that we're going to reverse and go higher. So it's about 50-50. Called the nice move here. More than enough. But yeah, from what I'm seeing, This market, as I discussed yesterday in the Telegram group, is exceedingly weak. So a lot of you guys asked me to see what trade I took. Maybe at the end of the stream, if I have a second, I'll share you guys the trade I took in the NASDAQ, how I shorted it, and then walked it on a tight leash down to the levels we were looking for. So let's go ahead and take a look at the NASDAQ. I'm going to put the NASDAQ up now. S&P already delivered, so now my interest is in NASDAQ to want to accelerate lower. Again, as we were discussing, the low here at 14,792. So that's my next area of interest. That's over 100 points lower. So like I said, it doesn't need to deliver it here in this last hour, but it's definitely in the realm of possibilities because this market is exceedingly weak. Denisha, one question for Friday. Are you leaning more towards a TGIF setup or further expansion lower? So that depends on what NASDAQ does. If NASDAQ reaches this low, that daily low, that would mean the objectives have been satisfied for the week. So then a TGIF would be very likely because TGIFs typically form on one-sided weeks, and we've had that lower, as we've discussed. And it depends on if we deliver to those objectives, because when we see weeks close at the low that give no TGIF, that's because it's still expanding towards objectives. But if it already hits those objectives and satisfies them, then it'll do a TGIF reversal. So that's what I'll be monitoring going into London or after London, going into New York AM session. I'll kind of see where we're at, what we're looking at, and then that's when I'll weigh out if we're going to have a TGIF or just a continuation. Nia, thank you for your time and knowledge. Enjoy the rest of your day. Thank you very much. Thanks for joining us. So again, discussing here how it wasn't necessary for the market to trade up into this fair value gap. Why? Because it's a balanced price range. So twice today, we discussed 2 breakaway gaps in real time. And that's the logic behind why those gaps don't fill. Balanced price range. And then here, because it's about 50% of the movement I'm anticipating, I wouldn't want to see the market fill in that level. Tanisha, thanks. Same page. Awesome. Twisted TGF is a monthly setup. No, it's a weekly setup. So it's a setup that forms on Friday in one-sided weeks. Comment on the CSD on daily, which seems to be the original start of the delivery. CSD is today's target. Not sure what you're asking there, brother. So if NASDAQ's going to keep running lower, I would want it to do so from this fair value gap in here. Cricket side, does Euro USD good for trading? Yeah, all currencies are good for trading. Euro, pound are definitely some good pairs to trade for sure. Jonathan Velasquez, can EU and GU be traded on Topstep? So specifically, the currencies themselves can't be traded, but you can trade the futures contracts of the currency. So Euro has I think it's 6E, I believe, but so there's futures contracts for the currencies, and you can trade them through there. But like I said, Topstep is primarily a futures company. So again, back to that hourly chart. So as we discussed at 2 o'clock, once I had the confirmation that this market wasn't going to want to keep expanding higher, I took your guys' attention to this candle. And I told you, where would this candle want to expand into? Lower. So like I said, once I understand where that hourly candle is going, and I took our attention to these equal lows, or the sell side, maybe it was ES, but I know I was expecting this candle to expand lower. Market aggressively runs lower. So this last hour candle for 3 o'clock, if my attention is here on the sell side here, what are we going to expect? Again, power 3 delivery, open, manipulation, expansion lower. So once you understand where that hourly candle is going to expand to, when I'm inside of my 1 minute charts, that's how I'm able to do all types of damage, pyramiding, building in bigger positions, and I'm able to do all these things once I have all these things in alignment. So again, bodies here respecting this fair value gap and then selling off. So I would want to see that continue. I would not want to see us get above this fair value gap if we're going to remain bearish. So understanding power of 3 here. So I just showed you guys the hourly candle. So now let's look at the hourly candle on a 1 minute chart. So this bright red, go ahead and make that. Let's make that turquoise. Up the thickness. So this is the open for the 3 o'clock candle. So again, like I said, once you understand power 3 and apply it to all time frames, all the retracements make sense. So because we opened here, if the last hour candle is going to expand lower, it's going to open, manipulate higher above that opening price, and then break down. So again, power 3 is not just limited to the daily chart. I'm using it on all time frames. But we should accelerate lower if we are going to continue doing so. But again, keeping in mind, it is that last hour of the day. So the daily range is typically going to be capped within that last hour. So time has a lot of applications. Let's see if I got a phone charger. So again, another thing I'm going to emphasize here with you guys is look at how much easier my trading is when I'm trading in line with that daily expansion. So once I understand where that daily candle is going, that is the key for your trading. Understanding where that higher time frame is reaching for. Because no matter what model you have, you could have the best entry model, you could use the Reaper, Medusa, inversion, fair value gap, breaker, whatever you want to use. None of them are going to be effective unless you understand that draw on liquidity, where the market's going. That's why those streams that we do on Sunday are so beneficial, because at traders, it aligns your perspective with what the market's actually going to be doing, and it narrows your focus. Because just imagine trying to go against the analysis and trying to buy in this weekly expansion lower, you would get shredded. So by understanding that and filtering those low probability trades and trading in line with that higher time frame institutional order flow, that's how you make for easier trading. So breaking down here on the 5 minute chart, 5 minute fair value gap, market poking up into that. So how we trade there will be influential. If we're going to keep delivering lower, then we should reject from this level. So just pulling up some fib projections here for the move lower. So if we reject this 5-minute fair value gap and accelerate through this low with speed, I'll then look at the -1 fib projection, which would be 14,841. But again, just like we discussed here, if order flow is going to remain bearish and we take out the buy stops here, the market should do what? Immediately reject and reprice lower. As we see here, equal highs, stops taken. Market should do what? Aggressively reprice lower. That's how you read order flow and confirm it. So here, same thing. Swing high, short-term stops have been taken out. I'm looking for the market to aggressively expand and reprice lower. Amelia, do you consider SMT with YM is also important? Absolutely. Definitely is. SMT between all three of the indices are definitely important factors to consider. At what point do you, the direction it's going to go, referring to the hourly candle? So I know where the hourly candle is going to go because that's highly dependent on where that weekly and daily chart candlestick is going to expand into. So once I understand that, then I'm just simply refining through the time frames. And I go down to my hourly, look for key liquidity or inefficiency, and then I'm doing the same thing through all the time frames. Benji, follow for sure. Thanks, brother. How often do you live stream? So today's the first day. Something I may start doing more frequently. Again, like I discussed at the beginning of the stream, before being a YouTuber or streamer, I'm a trader, most importantly. So my priority is always going to be my trading, of course. But I will look to start doing this more often here with you guys for sure. Olawale, why did you use that particular swing for that projection? So I'm just looking at intermediate term highs, intermediate term lows, and that's where I draw my fib projections from. So here we have intermediate term low, intermediate term high. So like a retracement or a Judas before the move lower. So I'll pull fib projections from this one, and then I'll also do it on this price leg here. So like the manipulation move that set up the true move, I like to measure that for fib projections, just to give me an idea for where we can go. But again, fib projections by themselves aren't helpful. You need to understand where the market's drawing to and what key PD arrays are at those levels. And then once I get fib projections aligning with those key levels, I know I have a likely draw on liquidity that's going to want to be delivered. So again, I don't like how this is stalling in here. This should aggressively start repricing lower. And if it doesn't, then sit on my hands. Already saw a nice move for the afternoon. Don't need to push it much anymore. Bruce, do you trade gold? I do not trade gold. I'll give analysis, higher time frame projections for gold, but it's not a market I like to trade. It can be very sloppy, range bound a lot of times, consolidate. It's a very event driven market. It requires a lot of news and geopolitical things to be going on around the world, and then it'll move around a lot. But a lot of times it'll just consolidate, stay in these tight ranges, and I don't prefer to trade that. You know, for example, just looking here at the daily chart on NASDAQ, how clean this market delivers, expanding to obvious levels in an obvious manner, and then comparing that to gold's price action. Not that it doesn't, but it'll go into these fickle consolidations for months here, and that's just personally not what I prefer to trade. Speaking of gold, let me take a look at it. Forex.com. So yeah, again, that's why, because it'll just get into a lot of consolidations, stay fickle, range bound. And again, like I said, there's cleaner markets to trade, in my opinion. Not to say it's a bad market. It's really just up to what you prefer. So again, always having that daily chart in mind. Where is it expanding to? Lower. So why on earth would someone ever try to long this market when clearly it's indicating it wants to go lower on these higher time frames? So like I said, huge emphasis. Always keep in mind where that higher time frame, daily, weekly chart is going. And again, that's why I do those Sunday streams, because it aligns your perspective with institutional higher time frame order flow. And if you focus your trades in that direction, you'll have a much higher probability of being successful. So again, took out the swing high here. So again, what do we want to see if order flow is going to remain bearish? It should take out the high and immediately reject and reprice lower. So now what I'm monitoring is these two up close candles. And I would want to see resistance here and see the market reprice lower from that. So again, new week opening gap, resistance perfectly, and then accelerating lower. So looking at the NASDAQ, same thing. Once we close below it, we do not want to see the market trade back up to the premium end, hits consequent encroachment, and then sells off there aggressively. So again, 5-minute candles, respecting this fair value gap. So we should continue expanding lower for the sell side. And I would want to see us aggressively expand through this swing low. So again, we looked at these two up close candles, real time, opening price, hit that. We said we wanted to see it accelerate lower for the sell side. Boom, right there. And just from this candle's open to this low, that's 11 handles in the NASDAQ. So plenty of opportunity, plenty of opportunity. Futures has less spreads than CFDs. Futures have no, I mean, the spread is one tick usually. You just typically pay commissions I mean, with real brokers, you have to pay commissions for your trades, which is easier to trade ES or NQ. They're both doing the same thing. NASDAQ's a bit of a faster market because it's more thinly traded. So it will move a lot more aggressively for liquidity because, like I said, it's more thinly traded. So it has to exaggerate its movements to absorb liquidity as opposed to ES. So it's a bit of a faster market, but they're both doing the same things in essence. So like I said, we should accelerate below this low. I don't like to see that shallow run. So if we're going to keep it going lower, we should aggressively run through that and not look back. So again, 5-minute chart here. We had our attention on this 5-minute fair value gap in here. Market trades up into that. Body's respecting it. Sells off below the low. So here we have up close candle, mitigation block in here. So this down close before the move higher. This should keep price at bay and we should reject from here. Dylan, you recommend Topstep for indices, but who are you trading with for currency? So personally, I've just been focusing on the indices market. For currency, I was trading through True Forex funds. They were my funded company that I was trading Forex through. And yeah, so that's how I was using for that. I don't recommend them or rep them at all, but they're who I was trading at before. My other associates, they do use other funded companies. I believe my funded FX, I believe. And yeah, yeah, that's the one it was. So there's a bunch of different ones. Definitely do your own research there. So again, as I said, making a lower low. But if we are going to continue going lower, this market should accelerate lower aggressively now. Can you explain handles? Handles is just 1 point. So 1 point in the NASDAQ or 1 point in the S&P, we refer to it as a handle. So as we discussed at the beginning of the session as well, compare the price action to in the afternoon session to the morning session. So morning session was a lot of back and forth choppiness, which is what we expect after FOMC. I shared with you guys how the markets were decoupled, all communicating to these things crystal clear. So we would expect cleaner delivery here in the PM session. And we've had that nice run lower. And again, walked it here on a tight leash. So it's all predictable, folks. Mr. A. Solomon, can futures be traded by people outside of the U.S.? Absolutely. Definitely. So looking at the 5-minute chart here, this up close candle, that'd be the last line in the sand for me being bearish. I would not be surprised if we reverse and pull back into the range today, just because we're getting to that latter portion of the day. But again, order flow is still bearish, so we don't try to call a top, especially in a market that's screaming lower. We never try to catch a falling knife. So this market opened, traded higher, hit that opening price, and now we're rejecting. So still sticking with my guns, looking at lower prices here for the NASDAQ and S&P. Do you leave streams on the channel? Yeah, I'll definitely leave the streams up for you guys. That's a lot of handles today. Absolutely. Nice run lower here in the afternoon. Beautiful. So what I'm monitoring here on the 1 minute chart is this fair value gap. As I said, just aligning that with the 5 minute bearish order block, getting through that, that would invalidate any lower prices for today. And again, looking at the timing aspect, going short anytime today, you definitely want to be covering those short positions in that last hour, understanding just that timing aspect of how the last hour will typically cap the daily range. But as long as you remain below this breaker here, which is that lowest down close, which is high, higher, high, down close, as long as you remain below that, again, I'll continue expecting lower prices. But through that, we likely have capped the daily range, and it's probably going to pull back and take some stops from the move lower. So my eyes go into this fair value gap, seeing how we're trading there. And again, several runs lower here. 1, 2, 3, 4, 5 lower lows. So that's offset distribution. So smart money that went short earlier in the day. Each time it makes a low and pulls up off that low, low pulls up off the low. That builds in more sell stops below these key levels. So smart money's offset distributing the positions that they accumulated in a premium. So as we see multiple anemic runs lower, that's typically indicative of a reversal. And then when you apply timing elements to that, for example, the last hour, it's extremely effective. JI Fish, do you ever look at initial balance ranges? Offer great intraday targets as well. I'm not sure what that is, brother. Not sure what that is. KK, hey buddy, if prices overall bearish but comes to a higher time frame bullish PD array, like a weekly or daily level. So to take the retracement trade, would you wait for the higher time frame shift? Okay, gotcha. So to take the trade into the retracement, yeah, I would have to have the market show me a willingness to rally, especially in a market like this because it's so weak, for example. If I was to look for a retracement, it would have to show me clearly a willingness to want to rally higher. So I would want to see some type of displacement with the fair value gap, just confirming that institutional sponsorship behind that move. So definitely, and especially for counter trend trading or trading retracements, I significantly reduce my leverage because again, it is counter to that higher time frame institutional order flow. Milia SPX just rebounded from previous month's low. Yep, so trading to and through that liquidity level. Yeah. Monthly chart for ES. Yeah, so that, oh yeah, okay. Yep, so the monthly low was that same 43.97 and 3/4 level that we've been watching. So getting here into the last 20 minutes. So again, body's still respecting that fair value gap. So order flow is still bearish for me. See that respect there. And then also we were looking at the breaker here. So that fair value gap and now putting it on the breaker. That last down close for the run on stops. Perfect respect there. So I'd expect the market to run through this low. I would not want to see the market find support here at this opening price or this bullish order block. So we should reprice through that aggressively if we are to remain bearish for the remainder of the day. Benji would love an explanation of how exactly you would close a short if this 1 minute fair value gap was broken. Yeah, so if we were to close above this fair value gap or the breaker, then I would just exit at market and just cancel all. Food, fashion, travel. I'd wish I'd been in this trade today. Frown face. Well, one thing, there's always tomorrow. And another thing, this skill set yields setups every single day. So focus on acquiring the skill set first, and the setups will come to you. A lot of times we focus on the money aspect instead of the process, but it's always the other way around. If you focus on the process, focus on mastering the craft itself, the money follows. And many times, and it's like that for everybody. We all learn the hard way, unfortunately. Going in trying to chase money, the most important part is focusing on the craft. Because then once you understand what you're looking for, you have a model that you trust, you'll know what you're looking for, and you won't have any concern with regard to when your next setup's going to come or wishing you were in a move. JI Fish, initial balance is the first 30 minutes of the opening range. The midpoint 1.5. Oh, okay, got you. Yeah, so I'll use fib extensions of the opening range. So yeah, I got you. So measuring the opening range and getting standard deviations, that's definitely something I'll do to look for confluences. So if I'm already looking for a key level, I'll get deviations from the opening range gap as an additional confluence. Absolutely. Yeah, definitely. JI Fish, it's definitely a great confluence tool in alignment with higher time frame draw and liquidity. Using those fib extensions from the opening range, definitely a powerful concept for sure. So looking at this here, I do not like to see how the bodies are respecting that bullish order block. So this would wrap up my day here for the PM session. Not indicating it wants to accelerate lower and just consolidating in that last hour. So now I'd expect us to pull back up into the range, maybe clear some stops here in the last hour. But again, nothing terribly exciting to do. There's about 15 minutes left of trading, and several targets already delivered, so nothing's jumping out to me as high probability. So just taking it easy. Dustin, I've been liking 2022 model, especially during silver bullet times. Yeah, man, 2022 is a high-powered model, brother. It is killer. And then you align it with specific times of the day. That's one of the setups I like the most is 2022 model during that silver bullet window. Definitely a high-powered model for sure. Mr. Solomon, this has been very helpful, Dylan. As always, thank you for your efforts, my man. Good day, night for me. Thanks for joining us, Solomon. Much appreciated. Hope you have a great rest of your night. Lady Chakma, this was great. Learned a lot today. Awesome. Thank you very much for joining us, and I appreciate the feedback. So if this was helpful to you guys, if you could give the stream a like, comment, let me know what you thought. Keep me motivated to do this again for you guys in the future. ML, thanks for sharing your knowledge. You're a legend. Thank you. Thank you very much. Edwards, thanks. Food Fashion, thank you so much, Dylan. You meant tomorrow, right? We'll see. We'll see. Anita Lowe, awesome, amazing, love it. Thank you. Thank you very much for joining us, Anita. Day one, much appreciated. Jay, thanks, man. Cheers. Arc Zone, great job. Great session. Definitely do this again. Will do. Thanks for the feedback, Remus. My God, I can't believe you pronounced my name correctly. Awesome. Awesome. Tomorrow live, we'll see about that. We'll see about that. I'll let you know when I'm doing the next one a few hours in advance, hopefully a day before. I'll go ahead and plan it out and let you guys know. Ricky Rod, thank you so much, bro. Appreciate your time. Learned a lot, especially being patient. Glad to hear that, brother. Frank, really like your analysis. Thank you. Denisha Hart, thank you very much. Mahmood, really insightful. Thank you. Benji, love it. Awesome. All right, so with that, let's go ahead and end it on this then. I was getting quite a few questions about the trade I took during the stream, so let me go ahead and cover that for you guys. How do I want to share this? Yeah, I can't share my actual broker. So I'll just go ahead and tell you guys where I got in. So 217. So I was a bit distracted with the live stream. First time trying to manage the executions and also live streaming. So when I was telling you guys about this fair value gap here within the inversion, that would have been the ideal silver bullet short, but I ended up having to pass it up because I didn't have my broker open in time. And I think I was looking at the chat, so I had to use this close proximity entry, and I got in this fair value gap here on this movement higher. So I sold short 2 contracts of the NASDAQ, and I did a full pull, no partial, down to the equal lows here. So once we delivered to these equal lows, I covered there. So selling short this fair value gap down to the equal lows, about a 40-point trade. So nice trade on stream. Not looking to push a lot of leverage, obviously, as I don't have my usual focus as I'm managing a chat room and everything else at the same time. But yep, so just recap the trade, and again, all the logic is there, covered live on the stream, and then I'll keep this up for you guys to refer to. KK, thanks a lot, Dylan. Was an eye-opener how you do the 1-minute chart and the detailing. Damn, will take me a long time. Take care. Yep, just takes time, brother. Just takes time, man. Putting in the work, studying, and then over time, becomes just like riding a bike. All right, everyone. So I think that's going to go ahead and do it for us. Again, thank you all for joining us, and thank you for the support, telling your colleagues about what we do here. Greatly appreciated. So I wish you all a good luck and good trading on Friday. And as always, I'll send you guys some updates in the Telegram with regard to what I'm seeing. So with that, have a great night, everyone. Take care. Good luck and good trading.